Okay, I'm answering a question that Steph had. She had asked if when we truly confirm we've reached a peak formation high after BMS on the hourly. So the question is, does BMS after a BMS form a peak formation? Let's take a look. Okay, first of all, we have to understand what the definition of what we're trying to look for when we find peak formation high, peak formation low. What we're doing is we're counting levels. And the reason what counting levels is, it is a function of counting what's called the market maker cycle. The market maker cycle is basically identifying 3 pushes up, 3 pushes down. Does it always give us 3 pushes? Not always. Does it always give us 3 pushes to the downside? Not always. Okay, so theoretically, the idea behind it is to count levels, count pushes to the upside, level 1, level 2, level 3. And does it always accompany a BMS? As far as I could tell, the answer to that question is yes. I don't always, I've never really paid attention to it. Now, let's take a look at what we have for, first of all, let me show you how I identify market maker cycle. And understand that when identifying market maker cycle, you could talk to 10 different people and they'll give you 10 different ways in which they evaluate a market maker cycle. I will tell you that the way I identify them is the best way in which I interpreted Steve Morris' work. And I'm a stickler for it too. So, how I identify is in order to get a level 1 off of a peak formation, you need the 50 and the 200 to cross over. So then that crossover identifies a peak formation. I'm sorry, a level 1. Level 2 is identified as the widening of the mouth between the 250 and the 200. A level 3 is the widest point where it widens, the point of widening of the mouth on level 3. And of course, peak formation is obvious here. And then again, we've got a level 1, crossover of the 50 and 200 on the bearish side, and we should expect a level 2. Okay, now the question is, does it always BMS? Well, let's take a look here. We have SMS here. Okay. Switch market structure, which was basically this point here to this point here. Lower low to a higher low. This was higher than this lower previous. Okay. And then this was our BMS here. This was break and market structure right here. BMS. Okay. So as far as the example here, the answer to the question is yes, we have BMS. Okay. And this was a peak formation high. Why is this peak formation high? Because this was the highest point on this particular range here. And then we started going from a higher high to a higher low. I'm sorry, lower high. And we had lower highs, all the way down till we got to this point. Okay. So on this case, we do have a BMS. However, I'm going to show you something. Since this was peak formation high and this was peak formation low, where would the BMS be? The BMS would be right here, right? So I would have dropped my fibs right here as I continue to catch entries for sells. I would have caught this. I would have caught here. I would have caught here because we were 50 or higher above, pushing to the downside still. And the question is, does it always accompany a BMS? This did BMS here. So again, the answer is yes. That was BMS. Once we broke this here, right, it gave us a peak formation low, consolidation, and it gave us a few days, 2 days worth of engulfing candles on the hourly chart, telling us that, at least telling me that we weren't going to come down to test these lows here, that they pretty much exhausted this and gave us an SMS. So again, it gave us the signal that yes, BMS was identified when looking for your peak formation. In this situation here, peak formation high, level 1, crossover of the 50 and 200, widening of the mouth, and then of course level 2, push down, level 3, pushing down. Level 2 is the widening of the mouth. Level 3 is the widest part of the mouth. And then, of course, peak formation low, which was these two drops right here. So if we were to say, okay, where was BMS here? BMS would have been right here. So this example, yes, we have another BMS. And then this here, I had identified as all internal liquidity. The external liquidity was this peak formation here and this peak formation up here. Okay, let me mark that. Boom, that was peak formation there. It went here, peak formation high, peak formation low. So if I would have drawn my fibs, it would have been from here to here, all the way across. And then I'd be looking for entries for sells because, of course, everything was bearish. So every time price broke the 50, I did not enter in here unless it was a counter trend trade. And then I would enter in here, broke the 50, enter in here. And of course, so the question is, do we always accompany a peak formation? I'm sorry, BMS. This would have been BMS. Actually, this would have been your first BMS right here, right there, right? This would have been your second BMS. Okay, so why didn't we call this peak formation low? You could have, and some chartists might call it a peak formation low, and then they would plot their support resistance right here, right, and drop their fibs from here to here. Okay, so going back to your question, do we have a BMS? In this case, we had a BMS. If we were to mark this as peak formation high, peak formation low, which you can, you could have marked this as peak formation low. Even this could have been a peak formation low to that high, because the market maker cycle is trying to identify your levels. That's really what it is. Yeah, so hope that helps.